Hello, my name is Mayanka. I am accounts and finance trainer from Uplatz. Today, we are covering the topic of India's one presentation of financial statement. This is the third part of India's one. In our first and second part, we have covered the objective of India's one, scope of India's one, definitions, and financial statements, balance sheets, and other points which is related to balance sheet. In this standard, in this class, we will cover statement of profit and loss account, statement of changes in equity, statement of cash flows, notes, disclosure of accounting policies, source of estimation uncertainty, capital, and other disclosure. We will cover all these topics in this video. Now we will start. First is statement of profit and loss account. The statement of profit and loss account shall present, in addition to the profit and loss and other comprehensive income statement, is that a statement of profit and loss account is a statement which is present all the items or all the events which is related to the profit and loss account and other comprehensive income. Is that the statement of profit and loss account present, in addition to the profit and loss or other comprehensive income, profit and loss of the entity, total comprehensive income, total other comprehensive income, and it is also present comprehensive income for the period being the total of profit or loss and other comprehensive income. Is that the statement of profit and loss account present the profit and loss of the organization, other comprehensive income, and comprehensive income for the period, which is the total of profit and loss plus other comprehensive income. An entity shall present the following item in addition to the profit and loss and other comprehensive income sections as allocation of a profit and loss account, profit and loss, and other comprehensive income for the period. There are certain following items which are in the point A, profit and loss for the period, which is attributable to non-controlling interest, and point 2 is owners of parent. Is that the entity shall present the following item in addition to profit and loss or other comprehensive income, which is profit and loss for the period, which is related to the non-controlling interest and owners of the parent. Number 2, comprehensive income for the period, which is attributable to non-controlling interest and owners of the parent. Information to be presented in profit and loss section of the statement of profit and loss account is that these information are to be represented by the entity in the statement of profit and loss account in profit and loss account sections, not on comprehensive section. It is presented in profit and loss account sections. In addition to items which is required by other IND AS, the profit and loss sections of the statement of profit and loss shall include line item that present the following amount for the period. Is that the statement of profit and loss account shall include the following amount for the period. Number 1 is the amount of revenue which is presenting separately interest revenue, which is calculating by using the effective interest method. The statement of profit and loss account contain the details of and present amount of revenue Number two is gain or loss which is arising from derecognition of financial assets measured at amortized cost. Number three is they will the statement of profit and loss account present financial cost. Next is impairment losses and the share of profit and loss of associate and joint venture which is accounted for using the equity method. Profit or loss share of profit or loss of associate or joint ventures which is accounted by using the equity method. A financial assets which is reclassified out of amortized cost which is measured amortization cost measurement category. A financial assets which is reclassified out of fair value through other comprehensive income measurement category. Tax expenses, a single amount for the total of discontinued operation. Is that a financial statement of any organization will present all these detail in the profit and loss account section. It is include revenue and the amount of gain or amount of loss which is arising from derecognition of financial statements, financial assets, finance costs, impairment losses, profit share of profit and loss which is related to the shares or shares in joint venture and associate, the financial assets which is reclassification of financial assets, tax expenses, and the single amount for the total of discontinued operation. Information to be presented in other comprehensive income section. The information which is to be represented in the other comprehensive income section. Other comprehensive income section shall present line item for the amount for the period of. Is that the item of other comprehensive income which is classified by the nature and grouped into those that in the accordance with other standard then will not be reclassified subsequently to the profit and loss account and will be reclassified subsequently to the profit and loss account when specific conditions are met. Is that the other comprehensive income section shall present line item for the amount for the period of the items of other comprehensive income which are classified by the nature and grouped into those in accordance with the other accounting standard and they will present and it will present and it will not be reclassified subsequent to the profit and loss account and it will be reclassified subsequently to the profit and loss account when the specific conditions which are required are met. The share of other comprehensive income of the associate or joint ventures accounted for using the equity method separate into the share of items that in the accordance with other IND AS then will not be reclassified subsequently to the profit and loss account and will be reclassified subsequent to the profit and loss when specific conditions are met. An entity shall present additional line items, heading, and subtotal in the statement of profit and loss account when such presentation is relevant to an organization to the understanding of the enterprise's financial performance. Is that if there is any enterprises which want to present additional line item, any heading or any subtotal in the statement of profit and loss account, then it may present and it may present when such presentation is relevant to the understanding of entity's financial performance. An entity shall not present any item of income or expenses as extraordinary item in the statement of profit and loss or in notes. As per IND AS 1, an entity shall not present any item of whether it may be income or expenditure as extraordinary item in the statement of profit and loss account or in its notes. Profit and loss for the period. An entity shall recognize all the items of income and expenditure in the period in profit and loss account unless an IND AS require or permit otherwise. Is that normally the entity will recognize all the items of income and the expenditure in its profit and loss statement in profit and loss sections. Other comprehensive income for the period. How to disclose the other comprehensive income for the period? The entity shall disclose the amount of income tax which is relating to the each item of other comprehensive income, including reclassification adjustment either in the statement of profit and loss account or in notes. Is that an entity shall disclose the amount of income tax which is relating to the other comprehensive income, and the entity shall also disclose its reclassification adjustment either in the statement of profit and loss account or in the notes of accounts. An entity may present item of other comprehensive income either net of related tax effect. Is that the comprehensive other comprehensive income are present in the statement of profit and loss account either net of tax or before related tax effects with one amount shown for the aggregate amount of tax which is relating to the those items. If an entity elect alternative B, then it shall allocate the tax between the item that might be reclassified subsequently to the profit and loss account section and those that will not be reclassified subsequently to the profit and loss sections. The entity shall disclose the reclassification adjustment which is relating to the component of other comprehensive income. Is that the if there is any reclassification adjustment which is relating to the other comprehensive income, then the entity shall disclose such reclassification adjustment which is related to the other comprehensive income. Information to be presented in the statement of profit and loss account or in notes. When the items of income or expenses are material, then the entity shall disclose their nature and the amount separately. Is that when there is an organization which is found that the amount of such income and the expenditure are material, then the entity shall disclose such amount of income or such amount of expenditure, and they will also disclose the nature and they will disclose the amount of nature of such item and the amount of such item separately. Circumstances that would give rise to the separate disclosure of the item of income and expenses include there are the certain items there are the certain circumstances in which there is the requirement of separate disclosure of the item of income and expenditure. These circumstances are: number 1, written down of inventory to net realizable value or of property, plant and equipment to recoverable amount, as well as reversal of written down. Is that if there is any written down of inventory to net realizable value or written down of property, plant and equipment to their recoverable value, or to their recoverable value, then such item should be disclosed separately. Next circumstances is restructuring of the activities of an entity and reversals of any provision for the cost of restructuring. Is that if there is any restructuring of any item, of any activity, of any entity, and there is any reversal in the amount of any provision of the restructuring cost, then in such case a separate disclosure is mandatory. Disposal of item or property, plant and equipment. If there is any disposal of property, plant and equipment, then in these circumstances a separate disclosure is required. Disposal of investment, discontinue operation, litigation sections, and other reversal of provision. Then in all these circumstances, a separate disclosure is mandatory. An entity shall present an analysis of expenses which is recognized. Is that an entity shall present an analysis of the expenses which are recognized by such entity. An example of classification using the nature of expenses method as follows. The example of classification using the nature of expenses method is as follows. Statement of change in equity. Statement in change in equity. Information which is to be presented in the statement of change in equity is that what are the information which are presented in the statement of change in equity. The entity shall present a statement of change in equity as required by this IND AS. Is that as per the requirement of IND AS 1, the entity shall present a statement of change in equity. The statement of change in equity include the following information. Number one is total comprehensive income of the period, showing separately the total amount which is attributable to the owners of the parent and non-controlling interest. Is that the the statement of change in equity shall be contain the following information. Number one, total comprehensive income for the period, showing separately the total amount which is attributable to owner of parent and non-controlling interest. Number two is for each component of equity, the effect of retrospective application or retrospective restatement recognition in the accordance with accounting standard 8 in the accordance with IND AS 8. For other component of equity, the a reconciliation which is made between the carrying amount at the beginning and at the end of the period, separately disclosing changes which is resulting from profit and loss, other comprehensive income, and the transaction which is made with the owner in the capacity as owner. Then showing separately the amount of contribution which is made by and the distribution to the owner, and changes is ownership interest in subsidiary that do not result in the loss of control, and any item which is recognized directly in equity, such as amount recognized directly in equity as capital reserve. In case these all items are required to be disclosed in statement of change in equity. Information to be presented in the statement of change in equity or in the notes. For each component of equity, an entity shall present either in the statement of change in equity or in notes an analysis of other comprehensive income by them, by the item. Is that when is that For in the is that for each component of equity, the entity shall present such component in either in statement of change in equity or in its notes. An entity shall present either in the statement of change in equity or in notes the amount of dividend which is recognized as distribution to owners during the period. Is that the amount of the dividend which is recognized as a distribution to the owners of the equity during the period, and the related amount of dividend per share. In the change in equity statement, in change in equity, the or in notes in account, the entity shall present the total amount of dividend which is recognized or the amount of dividend per share. Statement of cash flow. What is the statement of cash flow? Cash flow information provides user of financial statement with a basic to assess the ability of the entity to generate cash and cash equivalent, and need of the entity to utilize those cash flow. Is that the cash flow statement is a statement which is provide the information to the user of financial statement, on the basis of which the user can assess and know about the ability of the entity in the respect of generate cash or cash equivalent. And it is also provide the information about the need of entity in the respect of utilization of cash flow. IND AS 7 set out the requirements for the preparation and the presentation of cash flow statement, cash flow information. IND AS 7 cash flow statement cover the provision and the requirement for the presentation and disclosure of cash flow information. Notes. What is the meaning of notes? The notes shall the notes shall present the information about the basic of presentation of financial statement. Is that the notes of account shall present the information about the basic for the presentation and preparation of financial statement, and they will also specify the accounting policies which are used by the organization in the accordance with this IND AS. The notes shall disclose the information which is required by IND AS that is not presented anywhere in financial statement. Is that any of the information which is not presented in the financial statement are disclosed in notes. The notes shall provide the information that is not presented elsewhere in financial statement, but it is the relevant to an understanding of any of them. Is that the notes of accounts shall contain the information which are not disclosed in any way in financial statement, and these information are relevant to an understanding of any of them. An entity shall present notes in the systematic manner. Is that the notes of accounts of any entity are to be made and are to be prepared in the systematic manner. In determining a systematic manner, the entity shall consider the effect on the understandability and comparability of its financial statement. Is that for the determination of systematic manner, the entity shall consider the effect of understandability and comparability of its financial statement. An entity may present notes which is providing the information about the basic of presentation of financial statement. Is that the entity may present in its notes the information about the presentation and preparation of financial statement, and it is also and the entity may also present the specific accounting policies as a separate section of financial statement. Is that they will also provide the information about the accounting policies which are used as a separate section of financial statement. Disclosure of accounting policy. How to disclose the accounting policies as per IND AS 1. The entity shall disclose its significant accounting policy, comprising number one, the measurement basis which is used in the preparation of financial statement. Is that the entity shall disclose the measurement basis which are used by the organization for the preparation of financial statement, and it will also disclose other accounting policies that are used by the entity, that all are relevant to understanding of the financial statement. Is that the entity will disclose all the accounting policies which are used or which are relevant to understand the financial statement of the organization. An entity shall disclose in the summary of significant accounting policy or other notes the judgment apart from those involving estimation that the management has made in the process of applying the entity's accounting policies, and that have the most significant effect on the amount which is recognized in the financial statement. Instead, the entity will also disclose in the summary of all the significant accounting policies and the other notes and the other judgment which involve estimations that the management has made such process by applying the entity's accounting policies and the procedure, so that we can identify the significant effect on the amount which is recognized in financial statements. Source of estimate uncertainty. Sources of estimate uncertainty. An entity shall disclose the information about the assumption it makes about the future and other major source of estimate uncertainty at the end of reporting period. Is that the entity will disclose all the information about the assumption which are made by such entity about the future, and it is also disclose other major source of estimate uncertainty at the end of reporting period that have the significant risk of resulting in material adjustment to the carrying amount of the assets and liabilities within the next financial period. In the respect of those assets and liabilities, the notes of accounts shall include the detail of their nature and the carrying amount as at the end of reporting period. What is the meaning of capital and the disclosure in the respect of capital? An entity shall disclose the information that enable the users of its financial statement to evaluate the entity's objective, policy, and the procedure for managing the capital. The entity will disclose all the relevant information which all are important for the user of the financial statement, so that the user can evaluate the entity's objective, policy, and the procedure which is relating to the managing the capital of the organization. To comply with paragraph above the to comply the above paragraph, the entity disclose the following. Number one, disclose the following: quantitative information about its objective, policy, and the processes for managing capital includes number one, a description of what it's what is managed as capital, the description of what it manage as capital. Number two is when an entity is subject to externally imposed capital requirement, then the nature of those requirements and how those requirements are incorporated into the management of capital, and and how it is meeting its objective for managing the capital. Is that for the purpose of the above paragraph, the following disclosure shall be made. Number one, the description of manager's capital, the description of what it manage as capital. When an entity is subject to internally imposed capital requirement and the nature of those requirements, and how those requirements are incorporated into the management of capital, and how it is meeting its objective for managing capital. Next is summary quantitative data about what it manage as capital. Summary of the quantitative data about the manage of capital. Any changes which is made in A or B from the previous period. Point A and point B in the previous period. Whether during the period it comply with any externally imposed capital requirement to which is subject, then it should also be disclosed. When the entity has not complied with such externally imposed capital requirement, the consequences of the such non-compliances will also be disclosed by the entity. Putable financial instrument classified as equity. For putable financial instrument which are classified as equity instrument, then the entity shall disclose is that when there is any putable financial instrument and such instruments are classified by the entity as the equity instrument, then the entity is required to disclose the following points. Number one, a summary quantitative data about the amount which is classified as equity. Is that the entity will require to disclose a summary quantitative data in the respect of the amount which is classified as equity. Number two, its objective, policy, and the procedures for managing its obligation to repurchase or redeem the instruments when required to do so by the instrument holder, including any change from the previous year. Is that the organization or entity will disclose its objective, policy and procedure for managing its obligation to repurchase or redeem the instrument when required to do so by the enterprises or by the equity or instrument holder. It is also include any change which are made from the previous period. Number three, it will also disclose the expected cash outflow on the redemption or on the repurchase of that class of financial instrument, and it will also disclose the information about how the expected cash outflow on redemption or repurchase are determined. Is that it will disclose the method and the calculation in the calculation which is related to the calculation of cash outflow which is used on redemption or repurchase. Other disclosure. There are certain other disclosure which are required to be made as per the IND AS 1. Number one, the entity shall disclose in its notes. The entity shall disclose in its notes. Number one, the amount of dividend which is proposed or declared before the financial statement were approved for issue but not recognized as a distribution to the owner during the period, and the related amount of dividend per share. Instead, in the case of the financial statement, the entity shall disclose the amount of proposed dividend or the amount of dividend which is declared before the financial statement were approved for issue but not recognized, and the entity will also disclose the dividend amount per share. The entity shall disclose in its notes the amount of any cumulative preference share dividends which is not recognized. Is that the unrecognized amount of cumulative preference share dividend will be disclosed by the entity in its notes. An entity shall disclose the following if not disclosure anywhere in information published in the financial information. Is that the entity shall disclose these informations if these information are not disclosed anywhere in financial statement, then such information shall be disclosed in the notes. Number 1 is the domicile and the legal form of entity, its country of incorporation and the address of registered office. The description of the nature of entity's operation and its principal activities. Is that the legal form of the entity, the country in which it is incorporated, and the address and the registered office address of the entity, the nature of the business activities and the operations which are done by the entities, the name of the parent and the group of parent, and if it is a limited life entity, then the information which is related to the length of life. Then these information are to be disclosed by the entity in its notes to accounts if these information are not disclosed anywhere in financial statements. This is our this is our IND AS 1, which is covered by us in three parts: part 1, part 2, and part 3. Now, by this video, by all these three videos, we have covered full topic of IND AS 1. Thank you so much.